President Donald Trump and Treasury Secretary Steven Mnuchin met with former Fed Governor Kevin Warsh yesterday. This is according to an administration official. Now, the president will have to make a decision by early next year on who will lead the Federal Reserve after Janet Yellen's term expires. Could be her, it could be other people. It could now be Kevin Warsh. Joining us with more insight on where Warsh actually stands on monetary policy is Bloomberg's international economics and policy correspondent Michael McKee. Of course, he was at the New York Fed for a long time, also at Morgan Stanley, so he ticks those two boxes. He
wasn't at the New York Fed, he was a member of the Board of Governors from 2006 to 2011. Worked very closely with Ben Bernanke during the financial crisis because he had some Wall Street experience. Warsh is not far from a standard banker, although he has some slight differences in policy prescriptions. He does not like policy rules like the Taylor rule. He doesn't think they're accurate enough. He would go to a range for inflation rather than a point target like 2% right now. And he thinks that for the past couple of years, we've been within an acceptable range. I asked him earlier this year about how they measure inflation, and he had some very critical remarks about the CPI numbers.
The core PCE, the Fed's preferred measure of inflation, is a very bad proxy for the underlying strength in the economy. It's not a perfect proxy for what policy should be, and certainly it's not a very good proxy for the broad case of financial stability.
Now, the question is, how would Warsh go over at the Fed? Because he's not an economist, he's a lawyer. He did serve on the Board of Governors, but he's not, as I mentioned, an economist. So it might be a little more difficult for him to lead the Fed. Also, he has angered some people at the Fed with some sharp criticisms of the way the board is organized and governed. So that might be a bit of an issue.
Well, and just to follow up on the point he was making there, if he doesn't think that core PCE is a good proxy for inflation in the economy, what would he want to change that with? What would he place more emphasis on?
Well, he would, as I say, use a range rather than just a point forecast, so that if you're within a certain, few tenths.
But according to what metric?
Well, he would probably stick with the PCE because it's what they have. It's either that or CPI. Both are basically flawed. It's important to keep in mind, of course, that Kevin Warsh is not the chair or the nominee. There are job interviews going on, and he may have been the first one to get the interview.
Well, exactly.